everybody, I'm Dusty with Corcoran Platinum Living. Today I'm bringing you the things you absolutely must not do if you plan on buying a home here in Arizona. So buckle up, let's go. Alright, so if you're thinking of buying a home in Arizona or anywhere for that matter, I want you to get out a pen and paper right now and start taking notes. And at the very top, I want you to label it the 10 commandments of buying a home. These things are that important. Number 1, thou shalt not change jobs. Become self-employed or quit your job. Your lender is going to decide whether or not you qualify for a loan based on your income primarily and your debt to income ratio. So if you're going to change jobs, make sure your lender knows well in advance that this is coming, that if you're getting a promotion, that is coming and when that pay is expected to go into effect. And by all means, don't ever quit your job or change jobs, especially without telling your lender, or become self-employed. Once you become self-employed, there is no data, there is no guarantee that you will have a paycheck the next week. So keep that in mind. Thou shalt not change jobs. All right. Number 2, thou shalt not buy a car, truck, or van, or you may be living in it. This is going to drastically change your debt to income ratio. And if you're going out and getting new cars all the time, your lender is going to consider you high risk and therefore not managing your money the way you ought to, which puts you at a higher risk for not making your home payment. So keep that in mind. Do not go buy a new car ever when getting ready to buy a home or during any part of your escrow process. If you really need something, make sure you do it after your home closes. All right, number 3, thou shalt not use credit cards excessively or let current accounts fall behind. If you use your credit cards for everything and you've got this mountain of debt behind you, this is going to drastically affect your debt to income ratio, especially if you go out and start buying furniture and things for the new house and moving vans and all of that. If you're doing that during the escrow process and you're relying solely on those credit cards, your lender is going to have a problem with it. Same goes for if you have credit cards with zero balances that you haven't used in years. It's better to close them ahead of time and not have those accounts hanging over your head, especially if your debt to income ratio is questionable at all. If you're dancing around the limit there somewhere, make sure you go and close those, because your underwriter is going to look at those and say, hey, tomorrow Jane Doe could run out and rack up $15,000 worth of credit card debt, and we'd have no way of knowing that she was going to do that. So do not do that, and close any unnecessary accounts so that that isn't looming over your head when you go through escrow and primarily in the underwriting process. Number 4, thou shalt not spend money you have set aside for closing. What happens if you do? You can't get your house because you can't roll certain things into your mortgage. So if you don't have money to come to the table for your closing costs to pay for title and escrow fees or your funding fee or your down payment, you're going to be out of not only your home, but you might also even lose your earnest money deposit, especially if the home has already appraised, you're already past all of the outs that the normal contract would give you. If you're past all of that and you come to the closing table and you went, sorry, I forgot and I spent the money I had for closing, you're SOL and you could actually lose your deposit as well. That is a big no-no. Hard stop. Don't go there. Number 5, thou shalt not omit debts or liabilities from your loan application. I promise you, your lender and their underwriter will find out. I once had a client who thought that since the spouse was going to get things in their name, they changed routes and went to do things with both of their names on it. And unfortunately, not only did this person hide these debts and liabilities from the lender, but they hid them from their spouse too, and the whole thing blew up. Luckily, we were still within the the negotiation period and the inspection period and the appraisal period. So I was able to save their earnest money deposit. But your debts and liabilities, all of them, any of them, everything is going to have an effect on your debt to income ratio. And if it's not within a certain mark, the underwriter's going to say, sorry, no, you're spending too much money on other things. You've got all this other debt hanging over your head. You won't have enough money for your home payment. So don't do it. Tell everybody everything way up front. Make sure your lender doesn't just do a quick spot check of your bank account. Give them everything up front before you go shopping for a house. And that way, when you get under contract, you will know exactly what will and will not work and that you're good to go. All right, number 6, thou shalt not buy furniture on credit. And in fact, even if you have the cash sitting there, don't go out and buy a bunch of furniture during escrow. Your underwriter doesn't want to see any changes in your behavior during the escrow process. So do not do it. Not only if you do it on credit, it's going to affect, again, your debt to income ratio. Second, if you're doing it with cash, they're going to immediately say, hey, why did you have this big deduction here? Can you explain that to me? Oh, do you still have money for closing? It's going to create problems. It's going to slow things down. So just don't do it. Yes, you might have to get an air mattress or live with your shaggy sofa from college, for a week or two after closing. But trust me, doing that is better than not getting the house. Thou shalt not originate any inquiries into your credit. That means don't shop around a new credit card. Don't run your credit through multiple banks once you're under contract. I know statistically, legally you can, but it's going to mess with things and it's going to set up a red flag to the underwriter saying, hey, so-and-so's looking at potentially getting into more debt. Let's find out what's going on here. Don't do it. And especially if your credit score is right in the questionable range, do all your shopping up front before you get a house under contract. Okay? So just trust me here. Don't do it. I know it's one of the things that people assume that everybody knows, but you would be surprised how many times that happens. Thou shalt not make large deposits to your banking account without talking to your loan officer. Just like how I said, don't make any large withdrawals. Also, don't make any large deposits because your underwriter is going to come back and say, hey, where'd that money come from? Are you a terrorist? Are you a drug dealer? That's the kind of train of thought, and they're going to have to go track all that money down. A few times I've had to represent widows and widowers, and life insurance money comes in. It's one of those things where the minute I find out about it, I say immediately, go call your loan officer, let them know what this is so that they can tell the loan officer that it's all okay, because they want to track and they want to make sure in terms for not funding terrorism and all these other federal and legal guidelines that happen in the back end that you don't worry about, the underwriter does. So they're going to want to make sure that your account is even, Steven, predictable, smooth sailing, no white water going on, right? So just try to keep things in line. And if unfortunately you are in that situation where you do have inheritance or life insurance or something coming through, talk to your loan officer so that they can document it properly for you. Number 9, thou shalt not change bank accounts. Your bank account is basically the running tally of how you run your life and how you manage your money. If you switch, you got nothing. So don't do that because the underwriter wants to show that you're even, Steven, predictable, boring person that's going to make their mortgage payment, okay? So just don't do it. All right, and number 10, this I deal with a lot when I teach the Financial Peace University, Dave Ramsey class at my church. A lot, I see people who do this all the time, and it is, thou shalt not co-sign a loan for anyone, even if they are technically responsible for it. If somebody needs a co-signer, that is that creditor, that debtor telling you they are not responsible enough to trust on their own. Therefore, we need your money, and that will only add to your debt to income ratio. So don't do it. Not only is it a bad life choice in general, it's a bad plan. If somebody needs a cosigner, it's because they're not responsible or have no proven track record. So step away, even if it's your own child. Don't do it, okay? Trust me, you will be better off in the long run. So that's it. That's the 10 commandments of buying a home. If you have any questions or are looking to buy a home here in the Valley area, give me a call at 480-717-9405 or visit DustiMartinRealtor.com.